Stocks pulled back hard Friday as inflation fears took over. The Nasdaq fell 1.3%, the S&P 500 dropped 0.9% after closing at a record on Thursday, and the Dow lost 0.6%, slipping back below 50,000.
That was fast. Just one day earlier, investors were celebrating new highs. So what changed?
The main shift was in bonds. Yields moved up sharply, and that revived worries that inflation may be heating back up. The 10-year Treasury yield climbed above 4.5% to 0.56%, and the 30-year yield moved above 5% to 5.11%.
And when yields rise, tech usually feels it first, right?
Exactly. Higher yields make future profits less attractive, so growth stocks get hit first. Nvidia was down 3% at the open, and that helped drag the Nasdaq lower.
There was also a lot of focus on the Trump-Xi summit in China. Did that help sentiment at all?
A little, but not enough. The two-day summit had a business-friendly tone, included 16 top U.S. executives, and led to new deals for companies like Boeing and Nvidia.
So why didn't investors hold on to the good news?
Because the bigger issue is still Iran and the risk to oil supply. Taiwan and Iran stayed in the background of the summit, and there was little visible progress on easing that conflict.
And that is where the inflation fear really comes from.
Right, oil futures rose more than 2%. Brent was around $108 a barrel, with another report putting Brent near $107 and WTI near $102. The market is focused on the Strait of Hormuz staying effectively closed, which could keep energy prices high and delay Fed rate cuts.
So this is not just a stock story. It is stocks, bonds, oil, and even the dollar moving together.
Exactly. The US dollar index rose to 99, its highest level in more than a month. Globally, bonds were also selling off, with Japanese yields at record highs and European bonds under pressure.
What about metals? People usually think of gold as protection in times like this.
Gold actually fell 2.7% to $4,550. Silver dropped 8% to $78, and copper fell about 5%. Rising yields and a stronger dollar can weigh on metals, even the usual safe havens.
Were there any bright spots in individual stocks?
Figma stood out. Its shares jumped 9% after it raised its 2026 revenue outlook to $1.42 billion to $1.43 billion, up from $1.36 billion to $1.37 billion. That points to strong demand tied to the AI boom.
And Boeing? It was supposed to benefit from the China trip.
Boeing was roughly flat Friday. Trump said China had ordered 200 planes, which sounded positive, but investors were hoping for a much bigger mega deal.
I also saw Cerebra surge and then wobble.
Big move there. The AI chipmaker jumped 68% on its first trading day after pricing its IPO at $185, opening at $350, and closing Thursday at